In this video, I'm going to be sharing with you the 6 best money saving strategies that helps me save over 70% of my income. And make sure to watch until the end because each strategy that I use is how I save 70% of my income. Using these strategies allowed me to become a millionaire by the age of 28. It's disturbing how little money the average American has in their savings. According to a Federal Reserve survey of consumer finances, the median account balance is $5,300. And a recent Bankrate survey found that 4 in 10 US households aren't able to cover an unexpected $1,000 expense. And as of October 2021, the personal saving rate was 7.3%. To put that into perspective, the inflation rate was 8.5% in March. So essentially, the purchasing power of the amount of savings the average American has is being completely wiped away by the current inflation rate. Now, what's worse is that more than 1 out of 5 Americans don't save any of their annual income. Let me say that again. 21% of Americans don't save any of their annual income. Honestly, doing the research for this video was just as shocking to me as I'm sure it is for you. So my goal for this video is to give you actionable steps you can take today that will actually make a difference. These are the exact same steps that I use to save 70% of my income. And I use this income to spend on experiences, investments, and other things I want to spend my money on. So with that, let's get into the 6 strategies. The first strategy that I use is called the 7-day rule. A Finder.com survey showed that 64% of American adults makes an impulse purchase at least once a month. Now, what's more, they spend about $81 per session. Now, what I take from this is that most of us don't have the self-control when it comes to impulse purchases. In fact, 64% of Americans who bought an item regretted that decision after the purchase. Once I started implementing the 7-day rule, it really changed my mindset when it comes to impulse buying. The 7-day rule is like the 24-hour rule, but it gives you more time to actually process if it's something that you really need or want. Now, obviously, this isn't for all purchases. Don't be waiting 7 days to decide if you should eat out. I mainly use this for purchases that is a certain percentage of my monthly take-home income. My rule of thumb is if I'm looking to purchase something that's 10% of my monthly take-home income, then I'll implement the 7-day rule. So let's use a quick example. Let's say your take-home income per month is $5,000. So multiply that by 10%, which equals $500. So anything above $500, implement this rule. But this isn't a rule that you should just take as gospel. This is just something that I use that has helped me. You can play with that number depending on what your goals and needs are. So what do you do after the 7 days? I typically ask myself these questions. The first question is, do I still feel the same way about the product? The second question is, given my current circumstances, does it make sense for me to buy it right now? And the third question is, where am I at with my current overall budget? If you feel good about answering each question and it's in line with your goals, then buy it. If not, then don't. It's really as simple as that. What it really does is it takes the emotion out of it. Impulse buys are almost always guided by our emotions. If we can take that out of the equation, then it makes it much easier to spend money on things that we really need versus what we want. The second strategy that I use is automation. This has arguably been one of my favorite ways to save 70% of my income. I think it's natural for us to open up our bank account and see how much money we have and think, oh, I have X amount of money that I can spend on. When I was younger, I know I fell into this trap. So what I did to solve this was I set up automatic transfers. The way that I set it up is I have one main account that all my funds come into, which you can look at as a holding account. And pro tip that I wish I knew earlier, make sure to set up multiple checkings accounts at different credit unions around you. The reason I do this is if you're wanting to get future home and auto loans at great rates, it's important to develop relationships with different credit unions around you. Credit unions also typically give you the best rates around, so that's why I go to credit unions versus big banks. And number 2, if you just create separate accounts at one credit union, you usually can see all accounts on your online portal. And remember, the goal for doing this is I want it to be out of sight, out of mind, and thus less tempting to actually use the money. I automate it so a certain percentage of my income is distributed to each account for different purposes. For me, I have an account for my mortgages, car loans, bills, and investments. So each account serves a different purpose, and I can only spend that money on whatever that account is designated for. Automation has helped me tremendously because it's one less thing that I have to worry about. The easier something is, the easier it is for you to keep following it. That's how it is for me, and it's been one of the biggest factors to help me save over 70% of my income. The third strategy is tracking expenses. Now, this is one of the most boring but effective ways to save money. I mean, come on, no one likes to budget and track expenses. Well, maybe some of you do, but I know I don't. It's much harder to track if you can't physically see where your money is going each month. I used to track all my expenses in an Excel spreadsheet, but it became way too time consuming and thus harder to keep up with. Going back to my previous point, the easier something is, the easier it is to keep doing it. There are great tools out there that keep track of your spending like Personal Capital or Mint. I'm not sponsored by them. These are just tools that I personally use that has helped me. The reason tracking your expenses helps so much is it keeps you accountable on things that you're spending your money on. No one wants to see that you spent 50% of your income on clothes. It almost turns into a competition against yourself to see how little you can spend on certain things. And of course, these are things that don't really matter in the long run. The more fun you can make it, the longer you'll be able to stick to it. Speaking of tracking expenses, here are a few tips and tricks that have helped me save money on items that most people spend money on. The first one is food. Almost anything can be done online these days, and the same goes for grocery shopping. But honestly, there are so many better things that I can be doing with my time than spending a couple hours at the grocery store. So what I started doing was shopping for my groceries online. This sounds simple, but it does a couple things. The first thing, it saves a ton of time by not physically having to go to the store. And second, I almost always overspend when I shop in person. But when you shop for groceries online, it's much easier to set a specific budget. You can also see your running total as you shop, which helps you actually stick to your budget. Also, most grocery stores now will let you order and pick it up. And they'll even load it into your car for free. It really is a win-win. Another thing I regularly do is I look at all the rates on my loans, which includes home loans, credit cards, and auto loans. You'd be surprised by how much money you can save each month just by refinancing and lowering your interest rates. This brings me to the sponsor of today's video, AutoApprove. AutoApprove is an online service that allows you to refinance your auto loan into a lower payment, lower rate, or both. In 2021, AutoApprove customers saved on average $148 per month. The fact is, most people are paying way too much on their vehicle loans. Refinancing can lower your rate and in turn lower your monthly spending. You may think it's time consuming, but with AutoApprove, it's not at all. That's why I love AutoApprove. They connect vehicle owners to a network of the top credit unions and banks to find the best available interest rate to lower your current monthly payment literally within minutes. The best part is they do all the work for you. You just fill out your basic information and they handle the refinance from beginning to end. And they never mark up their rate, so the rate the lender offers you is the rate they pass on to you. Let's say you invested the average savings that AutoApprove customers saw in 2021 of $148 per month. If you invest that into the S&P 500 at a historical 10.5% return, in 30 years you'll have over $336,000. You can find out how much you can save on your monthly car payment and get your free quote with the link in the description. You also get $100 in cash sent to you if you refinance with AutoApprove. The fourth strategy is auditing your bills. Auditing your bills can be a pain, but if you're not careful, they can silently suck money from your bank account without you even knowing it. I guarantee you have one or more subscriptions you never or hardly use that you're spending money on right now. For a while, it felt like I had another subscription I totally forgot about popping up on my credit card statements, or by getting an email saying that they have automatically renewed my subscription. Now this will take some time to do, but it could potentially save you hundreds of dollars by taking the time up front to do it. So what I do is I go through all my credit card statements, bank accounts, and debit cards. Go through and look at each statement and track which subscriptions you're currently paying for. Once you track all of them, cancel the ones that you don't use or hardly use. Another thing you can do is negotiate your bills. Things like cable, internet, and phone bills can all be negotiated. Almost without fail, I get an email or a call from these providers every year that my bill is going to be increased. Most of the time, if you call and tell them nicely that you'll be leaving if they raise your bills, then they'll magically give you the same offer, or sometimes they'll even give you a better offer for sticking around. So definitely audit your bills regularly. The fifth strategy that I use is house hacking. Housing is the biggest expense each month for most people. In fact, more Americans are spending over half of their income on housing. So what is house hacking? I always recommend people to house hack as long as they are able to. I personally use this strategy when starting out. House hacking is where you live in one unit and rent out the rest. You don't need to have other units. You can also do this strategy by renting out your rooms or basement. And what this will do is offset your monthly rent or mortgage payment. The goal is to have a very minimal housing payment or even get paid if you find a good enough deal. So in my case, I bought a fourplex with a 5% down owner-occupied loan. I lived in one of the units and was literally getting paid a couple $100 to live in my house. I moved out after a year and rented out the unit that I was living in, and now I had a cash flow producing asset. You can use this strategy through Airbnb, longer term tenants, or roommates. It depends on how involved you want to be. Location also plays a part as well. If you're in an area where there's more tourists, it might make sense to Airbnb. If you're in a college town, it might make sense to rent out your rooms to college students. Again, it's a sacrifice most people aren't willing to make, but if you do, you can get ahead so much faster by eliminating one of your biggest monthly expenses. The sixth strategy is called the 50-40-10 rule. I think we've all heard of the 50-30-20 rule by now, but if you haven't, it's a budgeting method of allocating your monthly income. 50% of your take-home pay goes to needs, 30% goes to fun, and 20% goes to your future. In my opinion, these ratios are out of whack and can be significantly better. I personally use the 70-20-10 rule. This means that 10% of my income goes towards my wants like entertainment, eating out, etc. 20% goes towards my needs like rent, food, and cars. And 70% of my income goes towards investments, retirements, and savings. Now I know that's unrealistic for most people, and it takes years of creating income streams and limiting your expenses to live like this. So instead, I think most people should adopt the 50-40-10 rule. 10% of your income goes towards entertainment, eating out, etc. 40% goes towards your needs like rent, food, and cars. And remember, just because a car may be a need for you doesn't mean that you should go out and buy a Lamborghini. And 50% of your income goes towards your investments, retirements, and savings. The beauty of rules like this are that they can be adjusted depending on your goals. Like I mentioned earlier, automating your savings is a great way to adjust these ratios. But I believe if you're able to stick to the 50-40-10 rule, you'll be able to achieve financial freedom much faster. You can really lower your housing if you implement house hacking, which I recommend for most people, especially since housing is one of your biggest expenses each month. And bonus tip, make sure that you're playing offense. Saving money is great, but it'll only get you so far. Truth is, we can only save so much money. And the issue with it is it's finite. That's why it's incredibly important to take the money you're saving and invest into assets and side hustles. I have plenty of videos on this channel on investing and side hustles that you can check out. I look at saving money as playing defense with your finances. And you can do good things by just playing defense. But if you want to win the proverbial financial freedom championship, you need to have a great offense to go with it. So there you have it. Those are the 6 strategies that I use to save 70% of my income. To recap, they are use the 7-day rule, automate your income, track your expenses, audit your bills, house hack, and use the 50-40-10 rule. And again, you need a great offense to go with your great defense. I quit my multi-6-figure job to help you become financially free. So if you found this video helpful, please give it a like and make sure you're subscribed and hit that notification bell so you don't miss any new videos we post. I want to thank AutoApprove again for sponsoring this video. And you can get a free quote on how much you can save save on your monthly car payment with the link in the description. And don't miss out on their limited time deal where they'll be giving $100 if you refinance with auto approve. Thanks, and we'll see you next time.